Hello, hi guys. Welcome to first lecture of CA Final Audit Fast Track batch. Basically, in this first lecture, we will be covering some of the introductory topics, some of the basic topics related to the audit. From the next class onwards, we will be entering into the syllabus. Before starting the class, first of all, let me introduce myself. This is CA Balakrishna. Apart from teaching, I am also a practicing chartered accountant, and at the CA final level I teach 3 subjects. Firstly, paper 4 corporate and economic laws, and then paper 6D economic laws, that is elective paper, and paper 3 auditing. I will be dealing with these 3 subjects at CA final level, and my native place is Kurnool. Basically, for the people who don't know about Kurnool is a city in the state of Andhra Pradesh. So this is a brief introduction about myself, and since this is not a physical class, I'll not be able to you'll not be able to introduce yourself, okay, but no issue, that's fine. Now, before starting the class, what we'll do is I hope you know the paper pattern. I'll just briefly explain you how what is the paper pattern for paper 3 auditing. Let me erase this. Yeah, basically your paper 3, it will be for total of 120 marks including choice. Of these 120 marks, you need to answer 100 marks, and these 100 marks, 70 marks will be theory, and balance 30 marks will be MCQs. And of these MCQs of 30 marks, 20 marks will be case based MCQs. Okay, case study based MCQs will be getting for 20 marks. That is, first of all, he will give you a case study, and based on that case study he will ask you MCQs. Like this, you will get 2 case studies, each case study for 10 marks, and in the each case study you will be asked 5 MCQs. Each MCQ will be for 2 marks. Like this, in 2 case studies you will be asked 10 MCQs, and each MCQ carries 2 marks. Like that, there will be 20 marks for case based MCQs, and balance 10 marks will be normal MCQs. Balance 10 marks normal MCQs. Normal 1 mark MCQs will be asked for balance 10 marks. So this is the structure of MCQs. And as far as MCQs is concerned, you need not prepare for them again separately. You need not buy a MCQ book and prepare from that MCQ book. You have to just be thorough with the concept. If you are clear with the concept, you will be able to easily crack the MCQs. There is no requirement of any separate preparation for MCQs. Hope this is clear. You just be thorough with the concepts, that is sufficient. And coming to this, 70 marks will be of a theory paper. So this is the entire structure of paper 3 auditing. Now what I'll do is, basically here we are having total 22 chapters in my book. Basically in these classes I will be explaining the concepts from audit concise. I hope you have received this book through post. If you have not yet received, you will soon receive it. And this book I have prepared completely from ICAI study material, and this book has been prepared from the examination point of view, and all the terminology that I have used in this audit concise is completely 100% it is ICAI terminology only. I have not deviated from the ICAI material, and I have also covered all the topics from the ICS study material. I have not left any topics. Okay, so you will be receiving this audit concise. And coming to the weightage of the chapters, I'll just briefly tell you the weightage of these chapters. Firstly, there is introduction. You can't expect any questions from that introduction chapter. Next, auditing standards. If you see in the current scenario, ICAI is focusing mainly on these standards. ICAI is increasing its concentration on the auditing standards, because currently the scenario is like whenever any chartered accountant he goes for the audit, he will thoroughly check whether the financial statements are prepared as per accounting standards and Indian accounting standards, but he will forget to comply with the requirements of auditing standards. If you see in practicality, most of the qualified CAs, they are not concerned about these auditing standards, and due to this what's happening is like there is one body that has been set up by name NFRA, National Financial Reporting Authority. Recently in 2020 this body has been set up, and the duty of this NFRA is to review the audits that has been conducted by the chartered accountants. This concept related to NFRA we will be reading in professional ethics chapter. We will be reading this NFRA. Now the duty of this NFRA is to review the audits that have been conducted by the chartered accountants. By reviewing those audits, if chartered accountants have not complied with any of the laws or any of the standards, those non-compliances will be issued in the form of a report by NFRA. As of now, almost around 20 to 25 reports have been issued by NFRA, and if you read these reports which have been issued by NFRA, your mind will blow up, because many non-compliances majorly related to auditing standards. So seeing this scenario, ICAI wanted to focus more on the auditing standards, because once you qualify your chartered accountant and you move into practice, standards you need to follow, auditing standards you need to follow while conducting the audit. But currently there are many non-compliances related to auditing standards. So ICAI, it is increasing the weightage of these auditing standards attempt by attempt. If you see in the coming new syllabus, around 50 marks weightage is being allotted to auditing standards. But as of now in the current syllabus, you can expect around 20 to 30 marks from the standards on auditing. And if you see the recent examination, May 2023 examination, around 28 to 30 marks have been asked from the auditing standards. Okay, 24 marks have been asked from the in the theory, and in the MCQs at least 5 to 6 marks would have been asked from the auditing standards. Around 30 marks has been asked in the recent examination. So we can expect roughly 20 to 30 marks from the auditing standards. And next we have professional ethics. Basically these professional ethics, here you can expect 8 to 15 marks. Generally in some of the past attempts, in some papers professional ethics has been asked for almost 20 marks, but in the recent times the institute is reducing the weightage to these professional ethics, so you can expect 8 to 15 marks in the recent May 23 examination, around 8 marks has been asked in the theory portion, and in the MCQ portion 2 or 3 marks might have been asked. So around 10 marks has been asked in the recent examination. So the weightage is 8 to 15 marks. And next, audit in automated environment, it is 4 marks weightage. Audit of NBFC, even this is 4 to 5 marks. Audit of banks, 4 to 5 marks. And audit of insurance companies, 4 to 5 marks. Here if you see from these two chapters, audit of banks and audit of insurance companies, from these two chapters you can expect 5 marks. Okay, institute will ask questions from these two chapters alternatively. Okay, if in a particular attempt it asks for from audit of banks, there will not be any question from insurance companies in that attempt. Okay, in the next attempt, if there is a question from insurance company, there will not be any question in the audit of banks. So alternatively, institute will be asking questions from these two chapters. And next, audit of PSU, even this is a 4 mark weighted chapter. And coming to internal audit, management audit, operational audit, from these 3 chapters together you can expect 5 marks. In the same way, due diligence, investigation, forensic accounting, from these 3 chapters also you can expect around like 5 to 7 marks. And coming to company audit, here from the company audit you can expect 8 to 10 marks, and CARO you can expect 4 marks, liabilities of auditor 0 to 4 marks, and audit of consolidated financial statements 5 marks, audit committee and corporate governance 5 marks, peer review, quality review, from these 2 chapters you can expect 5 marks. Even these 2 chapters institute will test them alternatively. And finally, audit under physical loss, you can expect 8 to 10 marks. Okay, this is the weightage of each chapter, and from these chapters there are certain chapters from which institute will for sure ask a question in every attempt. What are those chapters? From audit under PSU, audit under physical loss, you will compulsorily get at least 1 question in every attempt. And audit committee and corporate governance, from this chapter also you will at least get 1 question. Audit of CFS also you will at least get 1 question. That is for sure. These chapters will be present in the examination. And from these 2, audit of bank and audit of insurance companies, from these 2 chapters always at least 1 question will be asked. And audit in an automated environment, even this chapter ICI will never miss, it will ask at least 1 question from that chapter. And professional ethics, however it will ask, auditing standards, however it will ask. So these are damn sure chapters. Okay, and here this one also, due diligence, investigation, forensic accounting is there na, from that. So these chapters for sure in every attempt you can expect the question. Okay, this is based on trend. So in brief, this is the weightage of the chapters. You can just take a screenshot. Yeah. Now we will be first of all starting with auditing standards. Okay, in our classes we will be starting with auditing standards. After completing auditing standards, we will go to the chapters, and these auditing standards you listen to them in the same sequence that I have provided you in the Google Drive link. In that auditing standards folder, I will provide you the sequence. In the same sequence you watch these auditing standards lecture. Okay, because if you don't follow that sequence, you will not be able to understand the standards, you will not be able to interlink the standards. Hope that is clear. You please follow that sequence. So since we will be starting with auditing standards, now I'll just give you a brief introduction about auditing standards and some of the common terminologies that we will be using in this audit. Okay, firstly, the basic question, that is whether auditing standards are mandatory while conducting the audit, whether auditor has to mandatorily comply with these auditing standards or these auditing standards are just recommendatory. The answer is auditing standards are mandatory. Auditor, he must follow auditing standards while conducting the audit. Auditing standards are not recommendatory, they are mandatory for every audit. Another question that most of the students will confuse is whether auditing standards are mandatory only for the company audit, or auditor should follow these auditing standards even for the audit of partnership firms, individuals, trusts, cooperative societies. Whether for all these entities also auditing standards mandatory? The answer is yes. For every type of audit where the auditor gives the audit opinion, the auditing standards are mandatory. It is not just for the companies. For every type of entity, if the auditor conducts the audit, auditor needs to follow auditing standards. Hope that is clear. Now another question, why these auditing standards have been implemented? If you see, similar to auditing standards, we also have accounting standards, right? Accounting standards, Indian accounting standards. Now why these accounting standards have been implemented? Because if the same rules, same procedures are followed by all the entities while preparation of their financial statements, it will be easy for the users of financial statements to understand the financial statements that have been prepared by the entity. There could be some comparability of the financial statements. So if all the entities follow same rules and procedures for preparing financial statements, it would be easy for the users to read those financial statements. So in order to follow same policies and procedures, particular standards known as accounting standards have been prescribed. In the same way, to audit the financial statements that have been prepared by the management, auditing standards have been prescribed for the auditors. Auditing standards. If each auditor performs the audit in different manner, okay, every auditor follows unique procedures, okay, there is no particular standard, every auditor gives a different type of audit report, different format of audit report, then it becomes difficult for the users of the financial statements to understand the audit. So in order to streamline the entire process of auditing, auditing standards have been prescribed, and these auditing standards must be followed by the auditors while preparing financial statements. Hope that is while auditing financial statements. Hope that is clear. So that is a basic understanding with respect to auditing standards. Okay, now who will frame these auditing standards in India? If you see, our ICAI, Institute of Chartered Accountants of India, it has established a particular board by name Auditing and Assurance Standards Board. Shortly we will be calling it as AASB. This Auditing and Assurance Standard Board will prepare the auditing standards. Hope that is clear. Now, how this Auditing and Assurance Standard Board will prepare the auditing standards? If you see, internationally there is a IFAC. You can see here how this Auditing and Assurance Standard Board has been set up. If you observe, internationally there is the International Federation of Accountants, IFAC. this International Federation of Accountants, it has set up International Auditing Practices Committee. Okay, IFAC has set up International Auditing Practices Committee. Now, what this International Auditing Practices Committee will do is, it will formulate international auditing guidelines. That is, international auditing standards will be prepared by International Auditing Practices Committee and International Auditing and Assurance Standard Board. These two will prepare international auditing standards. Now, since International Auditing Practices Committee has been established, what our ICAI has done is, for India, it has established Auditing Practices Committee. Okay, in September 17, 1982, it has set up Auditing Practices Committee. But now this Auditing Practices Committee is not there. This Auditing Practices Committee has been converted into Auditing and Assurance Standard Board. If you see, in July 2002, the Auditing Practices Committee has been converted into Auditing and Assurance Standard Board by the Council of Institute. That means the present day Auditing and Assurance Standard Board is converted from the previous previous name, Auditing Practices Committee. Previously there was Auditing Practices Committee. That committee is now converted into Auditing and Assurance Standard Board. Hope that is clear. And internationally there is a body by name International Auditing and Assurance Standard Board. This International Auditing and Assurance Standard Board, it will develop international auditing standards or International Standards on Auditing, ISA. Okay, International Standards on Auditing will be developed by International Auditing and Assurance Standard Board. Once these international standards on auditing are developed, what our Auditing and Assurance Standard Board will do is, it will copy paste this International Standard on Auditing as Standards on Auditing for India. It will just make some minor changes if required, but 99.99% it will be just copy paste from the International Standard on Auditing. Okay, the entire text of the Standard on Auditing that you will read in your syllabus is just a copy paste from the International Standard on Auditing. Okay, this is how the Auditing and Assurance Standard Board will prepare its auditing standards. Okay, copy paste. Yes. Next, scope and functions of Auditing and Assurance Standard Board. Basically, this Auditing and Assurance Standard Board is there now. It has been set up by the Council of ICAI. What is this Council of ICAI? Our ICAI, it will be having a council. Council is the managing body of the ICAI. Entire decision making will be done by the council of the ICAI. Now in this council there will be 40 members. All are chartered accountants. Okay. Basically these council members, they will be elected by the qualified chartered accountants. Once in every 3 years there will be council elections that will take place. Once you qualify the CA, even you can vote in these elections. So in these elections, all the members, they will elect 40 members as council members, and under this council it will set up various committees. So one such committee is Auditing and Assurance Standard Board. Okay, like this, for each matter there will be separate committees that will be set up by the council. Hope that is clear. So here the function of auditing and assurance standard board is, the main function of auditing assurance standard board is to review the existing auditing practices in India and to develop statements on standards on auditing so that these may be issued by the council of the institute. While formulating essays, the auditing assurance standard board shall take into consideration ISAs, that is international standards on auditing, issued by IAPC, applicable laws, customs, usages and business environment in India. The AASB, before developing any standard, it should thoroughly verify the present situation in India, and it should also verify whether there is any international standard on auditing that has been developed on the same matter. Okay, all this has to be checked by the auditing assurance standard board, and based on that it has to prepare standard on auditing for that respective matter. Once it prepares a standard on auditing, it will send this standard to the council of the ICAI. The council, it will verify if there are no queries or if there are no suggestions related to that standard. The council will issue the standard. In case there are any modifications, council will ask the AASB to make such modifications. Okay. Yes. Next, engagement and quality control standards. Basically, there are various types of standards that will be developed by the auditing and assurance standard board. What are those various types of standards? Let us see. Standards. Firstly, we have standards on auditing. Next, we have standards on assurance engagements. Next, we have standards on review engagements. Next, we have standards on related services. Next, we have standards on quality control. These are various types of standards that we have, but in our syllabus we will not be reading all these standards. We will just read standards on auditing. Okay, in our syllabus we just have standards on auditing. We don't have all these standards on assurance engagement, standard on review engagement, standard on related services. In standard on quality control, we have one standard. Okay, we only have SQC 1 in our syllabus, and remaining all other standards we don't have in our syllabus. You need not read. Now, standards on auditing. When these standards on auditing should be used? Basically, auditor follows these standards on auditing while conducting audit of historical financial statements, or you can say assurance engagement of historical financial statements. Now here you are seeing the term assurance. What is meant by assurance? Basically, the term assurance means giving confidence. Management, they will prepare the financial statements. Once they prepare financial statements, those financial statements will be used by various users. Now, the auditor, by auditing these financial statements, he will give confidence, he will give assurance to the users of financial statements, stating that these financial statements are free from material misstatements. These financial statements show true and fair view. These financial statements have been prepared as per applicable financial reporting framework. So, this is known as assurance. Auditor giving confidence to the users of the financial statements is known as assurance. Auditor will give assurance to the users that the financial statements are free from material misstatements. So, in this audit of historical financial statements, auditor will have to perform the audit as per standards on auditing. Hope that is clear. Next, standards on assurance engagements. Basically, these standards has to be followed by the auditor while conducting assurance engagements of other than financial statements. Example, let's say management has appointed auditor, asking the auditor to give his opinion on the operating effectiveness of internal controls. Okay, now this internal controls is not any financial statement related item. For giving opinion on the operating effectiveness of internal controls, management has appointed the auditor. So this is assurance engagement of other than financial statements. Here also auditor is giving assurance, but not on the financial statements, but on the internal controls or any item other than financial statements. In that case, auditor must conduct this engagement as per standards on assurance engagement. Hope this is clear. Next, standards on review engagement. What is this standards on review engagement? If you have done your articleship, okay, if you have done your proper articleship, not dummy articleship. Now, in case you have audited any listed entity, in case of listed entity, there will be a requirement to conduct a limited review. For every 3 months, a limited review has to be conducted and the limited review report has to be submitted to the stock exchange. This requirement you will find in case of listed entities. While conducting this limited review, auditor has to conduct this limited review as per standards on review engagements. Okay, here you can write limited review. Now, what is the difference between this limited review and normal audit? Basically, if you see in the limited review, first of all, in the normal audit, here in this normal audit, auditor will give high level of assurance, but not absolute assurance. Absolute assurance means 100% assurance. Auditor, he will never give 100% assurance. He will only give high level of assurance. Why? Because in the audit there are inherent limitations. Because of the inherent limitations of the audit, auditor cannot detect all the misstatements. Okay, inherent limitations means auditor, he will not verify all the transactions. He will verify only on a sample basis. Auditor will not obtain conclusive evidence. He will obtain only persuasive evidence. So due to these inherent limitations, auditor will be able to give only high level of assurance but not absolute assurance. So in case of audit of financial statements, auditor will give high level of assurance. This is audit. And in case of limited review, auditor will give moderate assurance, or you can call limited assurance. What is this moderate assurance or limited assurance? If you see the terminology that the auditor uses in case of these limited review reports is, as far as my verification is concerned, as far as the items I have verified, there are no misstatements in those items that I have verified. But I don't know about the items that I have not verified. Okay, as far as the items that I have verified, there are no misstatements in that. But I don't know about the other items. Okay, this is, he is limiting his assurance only to the items that he has verified. So this is known as limited assurance or moderate assurance. Whereas in case of high level of assurance, the terminology of the auditor will be like, the financial statements show true and fair view. The financial statements has been prepared as per applicable financial reporting framework. There are no material misstatements, whether due to fraud or error. This type of terminology will be used in case of high level of assurance. Whereas in case of moderate assurance, auditor will state that as far as the items that I have verified, there are no misstatements in that item. Okay, so this is the difference between limited review and normal audit assignment. Okay, next, standard on related services. What are these standards on related services? Let's say, for example, management has appointed a particular chartered accountant to prepare financial statements, that is, to compile financial statements. Now in this assignment, auditor, he will not give any assurance, he will not give any opinion, he will just to prepare the financial statements, that's it. So these are related services. While doing these types of services, auditor needs to follow standards on related services. Okay, and finally we have standards on quality control. Basically these standards on quality control are different when compared to remaining other standards. How? Let me explain you. There is a audit firm, right? Now this audit firm, it will take up various assignments. Assignment 1, it might be audit. Assignment 2, it might be some related service. Assignment 3, it might be some assurance engagement. Assignment 4, like this various assignments it might take. Now all the normal standards, accounting standards, standards on related services, accounting standards, not auditing standards, standards on related services, and standards on review engagement, all these standards, they will be applicable on the assignments that the audit firm take up. Whereas standards on quality control will be applicable on the audit firm itself. See, there is a difference. Remaining standards, they will apply on the assignments that the audit firm take up. Whereas standards on quality control, they will apply on the audit firm itself. Okay, the audit firm, it has to maintain certain quality standards because it is providing a service to the clients. Audit is a service, right? So this service must be provided in a qualitative manner. To ensure this quality, audit firm has to implement standards on quality control within its firm. we will be discussing this concept SQC1. While discussing SQC1, I will be explaining you this concept. Okay, so those are standards on quality control. Hope this is clear. Now let me show you this series. Now this standards on quality control are there now. Whenever the ICAI issues new standards on quality control, they will be in between these numbers SQC1 to SQC99. Okay, this particular series of numbers has been allocated to standards on quality control only. Okay, whenever any new standard on quality control is issued, it will be issued under this series SQC1 to SQC99. Okay, as of now there are around 5 standards on quality control SQC 1, 2, 3, 4, 5. Yes, there are 5 standards on quality control. In case any new standards on quality controls are issued, they will be issued in this series. In the same way, if any standards on review engagements has to be issued, they will be issued under this series SRE 2000 to SRE 2699. It doesn't mean that there are 699 standards on review engagements. No, this series is fixed for these standards on review engagements. If the institute issues any new standards on these standards on review engagements, they will be issued in this series. Okay, next, standards on assurance engagements SAE 3000 to 3699. In this series they will be issued. And standards on related services SRS 4000 to 4699. You need not remember these numbers. Okay, we don't have all these standards in our syllabus. Okay, in SQC we have SQC1. Coming to standards on auditing, these standards on auditing, they will be issued in this series SA 100 to 999. If you see, the introductory matters are discussed in SA 100 to SA 199. This is not there in our syllabus. Okay, this introductory matters is not there in our syllabus. Next, general principles and responsibilities of auditor are discussed in SA 200 series. Okay, SA 200 to SA 299. This is present in our syllabus. SA 200 series is present. Next, risk assessment and responses of the auditor. This will be dealt in a 300 series and 400 series. Okay, SA 300 to 499. Even this is present in our syllabus. Next, audit evidence. It will be in 500 series SA 500 to 599. Even this is present in our syllabus. Next, using the work of other people. Basically, this will be covered in 600 series. Here we will be having 3 standards SA 600, 610 and 620. Okay, even this is there in our syllabus. And finally, audit conclusions and reporting aspects will be discussed in 700 series. Okay, SA 700 to SA 799 we will be having this series as well in our syllabus. And finally, there are specialized areas which will be dealing with SA 800 to 899. We don't have this series 800 series, we don't have in our syllabus. So we have 200 series, 300 series, 400 series, 500 series, 600 series, 700 series. Okay, these standards we have in our syllabus. Apart from this, we are also having SQC1. Here I have given the list of standards, you can go through. Okay, total 36 standards we have in our syllabus. These 36 standards are for around 20 to 30 marks. Hope this is clear. Next, here you can find the 5 types of standards. You can go through that. I have explained you. Next, scope of standards on auditing. These standards on auditing apply whenever an independent audit is carried out, that is in the independent examination of financial information of an entity, whether it is profit oriented or not. Okay, whether the entity is a profit oriented entity or non profit oriented entity, if you are conducting the audit, auditing standards must be followed, or and irrespective of its size of the entity, legal form of the entity, whether the entity is a company, whether the entity is a partnership firm, whether entity is a LLP, whatever might be the legal form, if the auditor is conducting audit and giving opinion, he must follow auditing standards. Hope this is clear. Next, procedure for issuing standards on auditing. I have already told you that the assurance and auditing and assurance standard board, it will prepare the auditing standards. For the purpose of preparation of auditing standards, there are certain study groups have been developed. These study groups, they will do research and they will develop the standards, and once these they will frame the standards, and once these standards are finalized, these standards they will be submitted to the Council of ICAI. The Council of ICAI, it will review these standards, and if any modifications are required, it will suggest those modifications. Otherwise, it will publish these standards. It will issue these standards. Okay, this procedure you can find it here. Next, compliance with standards on auditing. Whether compliance with standards on auditing is mandatory, the answer is yes, you must comply with standards on auditing. Next, there is certain comparison that I have given. Let's see. Auditing, review, agreed upon procedures, compilation. Now in case of auditing, you will give high assurance but not absolute assurance, whereas in case of review, you will give moderate assurance or limited assurance, you can call. And in case of agreed upon procedures and compilation, you will not give any assurance. You will just perform agreed upon procedures and you will present factual information. You will not give your opinion in these 2 cases. Okay, and report provided will be positive assurance on assertions, and in case of review, you will provide negative assurance on assertion. That means in case of audit, you will say that all the assertions given by the management are correct, whereas in case of review, you will check whatever the items that I have checked, there are no misstatements in that. Okay, but for the items that I have not checked, I don't know about that. Okay, that type of terminology will be used in case of reviews. And in case of agreed upon procedures, you will just present factual findings, and here you will just, in case of compilation, you will just do identification of information compiled. Okay, just let's say you have been appointed to compile the financial statements, you will just compile the financial statements, you will not give any assurance. Okay, list of quality control and auditing standards, you can go through that. And then in the auditing standards, there will be certain terminology that we will be frequently using. Let us once discuss those terminologies. First terminology, misstatement. What is meant by misstatement? There will be ACPD. Okay, if actual ACPD is not as per the required ACPD as per applicable financial reporting framework, then we will be calling it as misstatement. Sir, I have not understood even a single letter. Let me explain you. First of all, what is meant by ACPD? A means amount. C means classification. P means presentation. D means disclosure. Now, if you see, there will be applicable financial reporting framework. What is this applicable financial reporting framework? Shortly, we will be calling it as AF or FW, applicable financial reporting framework. Example: accounting standards, Indian accounting standards. These are examples of applicable financial reporting framework in India. Okay. Management, while preparing the financial statements, it should prepare the financial statements as per the requirements of applicable financial reporting framework. In India, applicable financial reporting framework will be either accounting standards or Indian accounting standards. So management has to prepare the financial statements as per either accounting standards or Indian accounting standards as per the applicability. Now, if you see, in these accounting standards and Indian accounting standards, in almost all every standard, 4 aspects will be discussed. What are those 4 aspects? A, C, P, D. These 4 aspects will be discussed in almost all the accounting standards. First of all, amount, that is valuation, at how much value the item has to be recognized. Inventory, PPE, provisions, and revenue recognition. In almost all the standards, there will be discussion related to valuation, that is amount. Next, classification, whether item has to be classified as current asset, non-current asset, fixed asset, current liability, non-current liability, revenue item, capital item. Okay, this classification will also be described by each and every auditing accounting standards. And presentation, how the items has to be presented in the financial statements, even this will be described. And disclosure, basically presentation means basically in the financial statements, whether you should present assets first or liabilities first, there will be a particular format, and in which flow you have to present them. All this will be discussed in accounting standards and Indian accounting standards. And disclosures, okay, whether you have to give any additional disclosures in the form of notes, will be discussed in the accounting and Indian accounting standards. So there is a requirement in the applicable financial reporting framework with respect to ACPD. Now, management, while preparing financial statements, it should prepare financial statements as per the ACPD that is required as per applicable financial reporting framework. Now, management has presented this ACPD in a different manner than as required by the applicable financial reporting framework. That means the actual ACPD that has been presented by the management is different from the ACPD that is required as per applicable financial reporting framework. So this is known as misstatement, because management has not prepared as per the requirement of applicable financial reporting framework. So this is known as misstatement. Okay, let's say management has not valued the inventory at cost or NRV, whichever is lower. It has just booked the inventory at cost, but standard says cost or NRV, whichever is lower. So here there is a misstatement, because the amount that is presented is not as per the requirement of applicable financial reporting framework. So there is a misstatement in the financial statement. So this is the definition of misstatement. Hope this is clear. In the same way, classification, presentation, disclosure. Next, we will also be listening two terms. One is management versus those charged with governance. What is the difference between management and those charged with governance? Basically, those charged with governance is a higher level authority than management. For example, in case of company, we will be having board of directors and will also be having a managing director or whole-time director or manager. If you have completed classes related to paper 4 corporate and economic laws, you will be knowing difference between a normal director, managing director and whole-time director or manager. Basically, this managing director, whole-time director or manager, they will be responsible for day-to-day activities of the company. And in the same way, CEO, CFO, these people, they will be coming under management, and board of directors, they will be coming under those charged with governance. Board of directors, they will be concerned with the decision making process. Okay, and in some entities, instead of board of directors, even audit committee might be considered as those charged with governance. Okay, it changes from entity to entity. In some entities, both management and those charged with governance can be same persons. So auditor has to determine in each entity who is management, who is those charged with governance. Because why the auditor has to determine who is management, who is those charged with governance? What is the necessary for the auditor? Why should auditor determine? Why should auditor know who is management, who is those charged with governance? Basically, auditor, while performing his audit, if he faces any issues, if he found any misstatements, first of all, he will communicate these misstatements to the management and he will ask the management to correct those misstatements. If management doesn't correct those misstatements, or if the matter is not resolved at the management level, then auditor will bring this matter to those charged with governance, the next high level authority. So for this purpose, it is necessary for the auditor to determine who is management, who is those charged with governance. And this management and those charged with governance, they will be different for different types of entities. So auditor, based on the entity, he needs to determine. Hope that is clear. That is the difference between management and those charged with governance. Next terminology that we will be finding is assertions. What are these assertions? Now if you see, it is the responsibility of the management to prepare financial statements, right? They will prepare, let me draw somewhat bigger. They will prepare balance sheet, they will prepare profit and loss, they will prepare cash flow, and the financial statements preparation is responsibility of management. Now, in these financial statements, once the management prepares financial statements, it will give these financial statements to the auditor, asking the auditor to audit them. Now, in these financial statements, management is making various assertions. How? Here in balance sheet, you will find assets, various assets you will find, and the value of those assets you will find. In the same way, you will find liabilities. Okay, the value of those liabilities you find. Now, management has prepared this balance sheet and given it to the auditor, stating that, see auditor, we are having these assets and the value of these assets is this much. Okay, this is the assertion made by the management to the auditor. Okay, management is making assertion to the auditor stating that we are having this many assets and the value of these assets is this much. In the same way, we are having these liabilities, value of the liabilities is that much. Okay, like this management is making various assertions to the auditor. Now auditor has to verify whether assertions made by the management are correct or not. Okay, management, it can make whatever assertions it want, it can include whatever assets it want, but they must be true na. There should not be any misstatements in them na. So auditor, he has to audit whether all the assertions that the management is making are correct or not. Okay, assertions means just stating that this is true. Okay, management is stating that we are having these assets, take this. Now auditor has to verify whether the assertion made by the management is correct or not. Hope that is clear. That is meaning of the term assertion. In the same way, profit and loss. Okay, sales figure, management will write so and so figure. It will make assertion that this is our sales. Now auditor, he has to verify whether assertion made by the management regarding sale is correct or not. Okay, these are assertions. Yeah, these are some basic terminology that we will be getting in the standards. In case any other new terminology comes, I will be explaining them in that respective standard. Yeah, and yes, here there are certain documents that our ICAI will issue. See, documents issued by ICAI. First of all, the Institute of Chartered Accountants of India, it will issue statements, various statements it will issue. Whether these statements are mandatory or not, the answer is yes, mandatory. It will issue statements on various aspects. Earlier, peer review, we are having this peer review chapter in our syllabus. This peer review was given in the form of a statement, but now it has been amended and it is given in the form of guidelines. But earlier, peer review is also one of the statement that is issued by the ICAI, and you must remember that the statements that the ICAI issues is mandatory. Next, guidance notes. Basically, ICAI, it will issue guidance note in respect of matters where it feels that members are expecting some guidance from the ICAI. Members require some guidance, some knowledge in respect of this area. If ICAI feels so, then it will issue guidance note in that area. Example, ICAI is issued guidance note on guidance note on tax audit. Those are some examples, and these guidance notes generally they are not mandatory, but if in the guidance note it is specifically stated that all the members must follow with this guidance note, in that case they become mandatory. Okay, next, accounting standards and auditing standards. Even this accounting standards, auditing standards are also issued by our institute only, and these are mandatory for all the auditors. Okay, by this the introduction chapter gets completed. We will be meeting in the next class with standards on auditing, and you please watch the lectures related to standards on auditing only in the same sequence that I have provided. Hope that is clear. I'll be winding up this class as of now. We'll meet in the next class. Take care. Bye bye. See you.